Hey everybody, this is Jim at SV500chart.com. It's Saturday morning about 10:45, and we're going to take a look at what happened over the past week and what would happened a little bit more specifically on Friday, yesterday, the 21st of February. Before we do that, I need to remind you, as always, that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw these lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, starting first with an overview, a brief overview of the past 2.5 weeks. Well, let's back it up just a little bit more. The S&P had been in a downtrend that started pretty much right at the first of the year, really, because we were going sideways, and then late January we took a dive. And the S&P ended up giving up over 100 points in about 2.5 or 3 weeks. So it was kind of ugly while we did this. We came down to a long-term support line, started to go sideways there a bit, formed a little double bottom. It broke out over this resistance line here, and then just started moving up nicely over the course of about 2 weeks off of this bottom. This week, we broke this rising support line. That really doesn't come as any great surprise. Okay, it shouldn't. Why? Well, because look, we were at 17, well, let me just be a little bit more specific. We were at about, call it 1740. And then 1, 2, 3, 4, 5, 6, 7, 8, 9 days later, we were at 1842. So that's moving up a steady 10 points per day or more. And that's just an unsustainable clip. You just can't do it. You can't expect the markets to go up in that strong and upward move for a great length of time. So this week we started to kind of squeeze out the side of this channel here on Tuesday, because we did not trade on Monday. We back tested that on Wednesday, then started to fall down a bit, but I made the comment on the Wednesday video after the markets had closed, after we'd had that down day, that this just didn't look like that kind of catastrophic failure that you sometimes see when a channel breaks. It just looked like we're just kind of can't keep that up, so let's not pack it in and go home. Instead, let's just take a breather. And we broke out over this little potential bull flag on Thursday, then started to see a little bit more weakness on Friday. And the idea is this, backing out a little bit more, taking all of this into consideration that you currently see on your chart. The idea is, could we be forming a larger continuation pattern here, where this portion in this area would represent a left shoulder, this portion here a head, inverted head, and then something to follow over here to the right side that could be an inverted right shoulder. And I'm still very open, and I'm kind of eyeing it with that being a distinct possibility. We did not get that quick breakout that sometimes we've been getting in these inverted head and shoulder patterns, which I've jokingly called inverted shoulder, head, and flipper patterns, like we did down here. Here's a left shoulder, inverted head, little tiny flipper, boom, and we're off to the races. By the way, this pattern down here still has a target of 1858 that we haven't reached. Now, I made mention on Thursday's video that maybe we were looking at a small inverted head and shoulders right here that would also have a pattern of 1858. Well, folks, failed on that. We got over this line but couldn't hold it, so we're coming back. So let's scrap that little idea. It was cute while it lasted, but really we still got the 1858 up here from that other pattern. And I'm going to add another trend line on this chart just to see if going into the next week, if this were to hold, and that is just working off the last two lows that we've seen where a technical event took place. This was a low that clearly bounced on our lower support line, and this was a low that clearly was in place before we got out over this little very small descending channel. So I think this is a technically important data point. To a lesser degree, this is also, however, still, I think, a technically important data point. So let's see if this line were to hold up for us on Monday or Tuesday, whenever it might be tested. Let's see. The real, I think, the most important line that I think we need to see hold is this area down here right around 1800. If we were to come back down to this spot here and firm up, I wouldn't be really that concerned. You can see the depth of this potential inverted left shoulder got down to about 1815 or so. Typically your right shoulder doesn't go deeper than the left shoulder, but it sometimes can. So again, right now, just to make this as succinct and to the point as I can, we have resistance up here around 1850. We have support down here right around about 1800. So I would not think that if we get over the 1850, then I think we could be off to the races once again. If this breaks, then that would be reason for concern, to be sure. But I wouldn't be overly concerned, frankly, unless we see a move that takes us down underneath the lows that we saw in early February. That's when I would start to think, uh-oh, we have now failed to set a new high, yet we've come in and we've set a lower low. That would concern me. So if that were to happen in the week or two coming up, I would definitely think it may be time for us to abandon some of our bullish stance. But until it happens, I think I want to give, I can't speak for you, but I think I want to give this market the benefit of the doubt. Every time we have seen a sell-off, it has been wise, in retrospect, mind you, but it's been wise to give the market the benefit of the doubt. And I'm inclined to do that again. So guys, pretty short and sweet for the daily look at Friday, February 21st, and the weekly review. I really don't think we're really, if you look at the week here, it was just a week of going sideways. Maybe this still could be a little cup and a handle or something, what we saw the last 3 days of the week. This still could be a little bullish pattern, but if it is, we still have the same area of resistance that we need to get over for this smaller pattern to be confirmed. So this little thing turned out, that little potential inverted head and shoulders, kind of a bust. Okay, that didn't work. But still could be a little bullish sideways action. We won't know until it won't be confirmed as a bullish pattern until we're over 1850. And it won't be confirmed really as this sideways being a bearish pattern until we break this line right here. And even at that, it wouldn't be horribly bearish, because we could just be coming down to the low 1800s, where we may bounce and come back and make another run at this line. There's all kinds of possibilities right now. One thing that I want to just throw out real quick, because we're in this area where we're setting, or on the verge of setting new highs, it makes the chart a little tougher. We have, the good news is we do have some resistance lines to look out for, to give us triggers. If we break out over these lines, we know we can expect now a run to the upside. So that's good, but really everything that we're looking at is pretty much on the short term, unless we were to get up to up in the upper 1800s or even over 1900. So guys, that's your video for the week ending February 21st, 2014. A little bit of disappointment after trying to get over this line at about 1846. Just couldn't quite do it. But let's see if this line holds. If this holds, we could be setting up again another fairly bullish pattern with a pretty much flat line at 1846, but rising support. If we get that bounce here and then come back up, that could be the point at which we could take this out. But again, nothing is confirmed until it's confirmed. So right now, all we can do is set where we believe the boundaries are, where we believe the fences and the speed breakers are, knowing that if we get over a speed breaker, then upon backing up, it'll still be a speed breaker and should give us some support. That's the way that resistance gets turned into support, and support gets turned into resistance. So guys, thanks for watching. Thank you for your support. And let's see what the markets have in store for us this week coming up, starting February 24th. Take care.